Hey folks, Dan Frio here with your market update for September 5th, 2024. So mortgage rates, they're continuing to go down. So if you've been sitting on the sidelines, good job for you guys. We haven't locked in a lot of people recently. I was hoping today's jobs report came in okay, I guess is the best way to put it, so we can continue to see these drops in rates. So how did the jobs report come in today? The ADP report came in this morning, and I usually don't put much credence in on it because they changed their model about a year ago, and I just didn't like, the deficiencies between, the real government numbers versus what the ADP numbers were. They're kind of offset a little bit. So I want to bring over CNBC, give them the breaking bell right here, let you know what's going on with the jobs report. And then when we come back, I'm going to go through all the news with you guys to see what's going on in the background. But we do have MBSs up 7 ticks. So mortgage rates are going to drop just a little bit more today. So what's in the news for the headlines in the jobs report? We'll take it away. The ADP report is just in.
Right now, we've got ADP numbers out, and Steve Leisman has those. Let's get right over to Steve.
Becky, thanks. Just 99,000 ADP reporting that private payrolls for the month of August rose by just 99,000. That's against an estimate of 140,000. It's the lowest level reported by ADP since 2021. Goods sector up 27,000. Not really that bad for the goods sector, but service sector not doing its part, just up 72,000. All of this is against the payroll estimate for Friday of 161,000. We'll see how confident economists and forecasters are in that forecast as the day goes by. July was revised down by 11,000 to 111,000 from 122,000. Where were the jobs and where weren't they? Well, small business did not do very well in this month, down by 9,000. You can see right there. Medium okay at 68,000. Large businesses greater than 500 employees up by 42,000. By industry, there's education, health services at the top again, but not as strong as it's been. Construction, okay, 27, but in that goods sector, it was manufacturing that took off the 8,000. Financial activities, okay, but professional and business services down by 16,000. Looking at this data on wage gains, unchanged at 4.8% year over year for job stayers, 7.3% for job changers. We don't know because we don't have the series going back pre-pandemic where the right level is, but it looks like we have, at least for a couple months here, bottomed out at this, what do you call it, relatively high, but much lower than it had been in terms of the wage gains that were out there. Becky, this adds to some concern out there about the economy from yesterday's Beige Book. They said consumer spending ticked down in most districts. Only 3 districts reported, of the 12 districts of the Federal Reserve, reported any increase in business activity. So there seems to be a gathering weakness here. How much deterioration? Well, we'll see at 8:30 with jobless claims, and again tomorrow in the BLS.
Hold tight. So what you have to realize as well is this is pre-orchestrated. It's what the Federal Reserve, the whole goal of them increasing rates was to bring down spending, to bring down the economy, to cool things off. So these things are basically telling us we're not falling off a cliff, we're not hitting a complete brick wall. It's slowing. So we're going to continue to watch these numbers. But let's continue on because they do talk to the economist at ADP. She gives a little bit of a deep dive into these numbers. So let's continue.
Payroll report.
Steve, I think you hit the interesting point, how this is going to impact potentially people's estimates for what they're going to see tomorrow with that jobs number. You think automatically, is that what normally happens? If there's a stronger or weaker number, people adjust their numbers?
There are a lot of different attitudes out there about ADP. Some folks...
So here's what he starts talking about, the ADP numbers. This is where I am. They used to have a model that changed about a year and a half ago, and the model was terrible. They were so far off that I didn't even continue to look at them. And then they changed their model, and they start getting a little closer. So what he's going to talk about right now is how is there a big variance between the national numbers that the government posts and then ADP, which is the country's largest payroll company out there. So he briefly talks about that just a little bit, and then they bring in the ADP economist.
Folks throw it out. Some people use it as an essential part of their forecasting. I did the math again. I do it every month. The absolute difference between ADP and the BLS private sector report has been 31,000 the past 3 months. So it has been close. It's been very wide in the past, the 3-month average, as much as 150,000, but it's been pretty close recently in the 30 to 50,000 range. So I would think it could influence to the downside a little bit out there, the expectations for the market.
Okay. Steve, thank you. Joining us right now to talk more about it is Neela Richardson. She's ADP's chief economist. And Neela, what do these numbers tell you?
Well, it tells me that after 2 years of outsized hiring and growth, we're finally seeing a normalization that's a little cooler than expected, cooler than average, slower hiring than we've seen in the past. And so taken together with other data, it's pointing to a softer labor market. We're not falling off a cliff. These are not job losses, but slower hiring, stable wage growth.
Why do you think small business seems to be feeling the brunt of this? That's where the declines came in, the job losses came in from small business.
Yeah, structurally, the economy's changed a lot over the last 4 years, and I think one of those notable changes have been the pickup in small business. Remember, new firm formation, business applications soared during the pandemic, and some of those were really viable small firms. About a third of them were what the census called high propensity employers, able to add headcount, but some of them weren't. And so I think part of this is you're seeing that structural shift, that some of these firms are new, and so they take longer to pick up steam and to hire. More importantly, also a lot of small firms are tied to leisure and hospitality, restaurants and bars that saw outsized hiring by the ADP numbers over the past 2 years, but that hiring has slowed. And so it's an industry effect and a structural effect that is really impairing some of that small firm hiring.
If you were on the Federal Reserve, what would you think this is an indication of a need for? Is it a need for a 25 basis point cut, a 50 basis point cut?
I don't think this jobs market actually points either way for the Federal Reserve that is looking at a cacophony of data. What I will point out, though, and I'm sure that the Federal Reserve members are attuned to this, is that it picks up on some trends of weakness that we saw before the pandemic, like manufacturing. Manufacturing was shedding jobs 6 months leading into the pandemic. And that trend was masked by all the changes we saw over the last 3 years. But when you look at it, we're picking back that trend of soft and weak manufacturing. So when I look at that 99,000 private sector, I say, hey, this is a pretty normal hiring market, except for manufacturing. That's the missing part. As the service sector is normalizing, manufacturing is just not a team player in this labor market.
So I grew up in an area, you guys know, it's Pittsburgh, West Virginia, where it was coal mines and steel mills. It was all just manufacturing. Now you go back there and it's a ghost town. Manufacturing is leaving this country, and Nippon Steel, it's a Japanese firm, it's trying to buy U.S. steel. And I'm at odds with that as well, because it's like I grew up in a steel mill town and it's gone. I mean, there were steel mills basically for 20 miles along the river, and they're gone. I mean, gone. So our steel is being produced, in mini mills and stuff like that. It's scary because, let's just assume we go to war. Where's all this stuff going to get built? Okay, that's one of the biggest concerns I have. So that's that part of the equation. You saw as she was talking, the MBS market dropped a little bit. So MBSs are basically flat right now. So nothing's going to go on. What everybody's going to watch is, or pay attention to, or hold off for, is tomorrow's government report. So let's get to the main news right through here. Here's Thursday's activities that we see so far. ADP payroll numbers came in. Previous reading was downgraded actually to 111,000. It was supposed to go up to 144, measly at 99. Didn't even hit 100,000. Initial jobless claims, 227,000 new claims from 232. So that's kind of there. And then the rest of the stuff I was waiting for to just pop in. It came in just recently. And these are all kind of, I'll say they're right on, fairly on target. You got servicing PMI 55 to 56. You have servicing manufacturing PMI, manufacturing prices. They're all right in line to what expectations are. So let's see what the broad markets are doing right now. They're flat. Well, let's say the Dow Jones is down 80. We have the S&P basically basically flat. The Nasdaq's up 120. We have the Russell 2000 up 3. And then we like this. The VIX is coming down, meaning the anxiety on Wall Street's going down. Let's see what cryptocurrency's doing. Did we pick a bottom yesterday? No, we didn't. Almost. So it's still continuing to struggle just a little bit there, but let's go over to oil. Oil is up a tad too. So, these were expected. Oil was down, to $68 a barrel, I think, yesterday. So it's ticking up. I don't mind if oil's between 70, 75. That's okay. So though all these are basically just saying, people are just holding off right now, or traders are holding off to see what the markets do. So any changes on the CME FedWatch tool on what rates are going to do or what the Federal Reserve plans to do? Because folks, the Federal Reserve's, they're meeting in 2 weeks, right through here. In 13 days, the Federal Reserve's going to meet, and the CME FedWatch tool tells us what are they going to do. So right through here, it continues to say a quarter cut is what's expected right through here. There's a 55% chance of that. And then the cut in November is supposed to go all the way down to the 4% or 4.5 to 4.75 range. So let me put this into context for you. So if you're new to the channel, the federal funds rate, this is telling us where the federal funds rate is going to be right through here along the top. This tells us where the federal funds rate is. Right now it's 5.25 to 5.5, which would be a sell here. Okay, so this means it's expected the Federal Reserve to drop a quarter point. If they dropped a half a point, it would be in this cell here. So that's what's expected at the next meeting. So the pivot point is right through here. What are they going to do? They're going to cut 25 or 50, and it's all going to be, I hate to say it, it's going to be very much dependent on tomorrow's jobs report that we're going to see right through here. So it's jobs, 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 and more jobs. So that's it for this morning's news. And so the next question is, you might say, Dan, who are you? Well, let's get over to rates, because this is the biggest concern with people. So these are the top 6 rates people get or choose when they're basically buying their first house, refinancing, and so forth. So here's what rates are. To get these rates, here's what a lot of people don't understand. When rates get posted, you got to think of this. When somebody posts rates, they're going to give you their best foot forward. Okay, so these rates they're pretty darn good. Okay, but what consists of these rates? Well, these people in this sphere here, these people are buying their first house. It's a single family home and they're first time home buyers. Plus, they got pretty darn good credit and they're putting down a chunk of money because it's right through here. This is saying right through here that they're putting down 25% right here, and they have a credit score of 780 and above. So those people are pretty solid clients right through there. I'll tell you that. So if you're trying to figure out what you qualify for, well, go to the rate update right through here. My name is Dan Frio. I'm a loan officer licensed in all 50 states as well as Puerto Rico. I'd love to help you navigate if you're trying to buy your first house, maybe first investment property, maybe looking to refinance. So visit us at therateupdate.com. If you're looking to buy that first house, check out the grant finder. If you want to just put in that application, get rolling, click the apply now button. Or if you have questions or want some questions answered or talk to somebody, well, scroll down to the bottom of the screen. You're going to find our 800 number as well as my email address, and it is right there. So thanks so much for watching, guys. God bless. I'll be back at the closing bell to see where all this mess ended up for the day. Thanks so much. If you haven't subscribed yet, please, you could do that right over there. Take care. Talk to you soon. Bye-bye.